So let's talk a bit about how the MACD line is calculated. So MACD indicators are formed by subtracting two exponential moving averages, EMAs, which we spoke about in the previous section. This makes up the main line, or the MACD line. So these EMAs are based on the closing prices of the asset, where the first is usually based on 12 period moving averages, and the second is on 26 period averages. These periods are based on the chart being viewed. For our examples, when we're talking about this, we'll just think of each candle as a daily candle. We're looking at the daily chart. So in this particular instance, we're considering the past 12 daily closes and their averages, and the second would be 26 period averages. So we would consider 26 days worth of closing averages. Now, the MACD line is calculated by subtracting the 26-day EMA from the 12-day EMA, where we can think of this formula. We have the MACD line, it's equal to 12-day EMA minus the 26-day EMA. Now the MACD line moves above and below the zero line as price action changes, where the center line crossovers indicate that the 12-day and the 26-day EMAs are changing values or changing direction, overall price direction. So when we see that blue line shift around, that's when we're starting to look over, and cross above and below the zero line will have a stronger indication of where the average price is trending. Here's an example of a MACD. So here is our zero line, pretty much in the middle of this histogram. As you can see, this is our zero line over here. In this instance, our MACD line is in this bright green, and the signal line is white. Histogram is in red. So what we're looking for is, all right, where is the MACD line crossing above the zero line? So we see it here, right? This is where we start to see, so this would have been an indication that price is possibly trending upwards, and it looks like it does continue to do so. If it were to cross below, that's an indication that, as we saw here, as an indication that prices are coming down. We'll take a look at a couple chart examples in the next few slides. So this MACD line is then used to formulate another EMA that represents the signal line. So the signal line is typically based on a 9-day EMA from the MACD line. So really the signal line is an EMA of two EMAs, right? The MACD is made up of two exponential moving averages, and then the signal line is based on a 9-day EMA from the MACD line. So we're seeing an average of an average calculated, and this is where we start to really dive into the average rabbit hole, so to speak. Now, when the MACD line and the signal line cross over one another, it's usually interpreted as a trend reversal, where while no indicator is 100% accurate, it's one thing to consider. The farther from the zero line that the crossover occurs, the more it's deemed as reliable or significant. So one thing to consider, here we see, so let's say the MACD line is below the signal line. If the MACD line crosses above that signal line, that's interpreted as a trend reversal, and we're starting to see prices come up. Now, on the flip side, if the MACD line falls below that signal line, that's an indication that prices are coming down. Finally, the third part of the indicator, in the middle of the indicator is the MACD histogram, which tracks the difference between the two lines. This would be the MACD line minus the signal line. This is a visual representation of the movements of the MACD and the signal lines without having to add yet another line to interpret. So now we're starting to take a look at not only averages over a period of time, not only averages of two periods of time and comparing them, and then we're also taking another average of those two, of a calculation of those averages, and then visually plotting that out in terms of the histogram. So to keep it simple, raising green bars are elevating green bars to the upside indicate an uptrend and increasing prices. Lowering red bars, I should say, indicate a downtrend and decreasing prices. So here's an example of the MACD in action. What we're looking for is, what we specifically want to look for is, note how the MACD histogram, these bars down here, note how it's red when price is coming down, and how it changes as general price direction shifts. So price is coming down from here to here. At the same point, price was in this green area, indicating that we're at some sort of high, right? And then it's crossing over and falling as price comes down. So this gives an indication of the general trend. At the same time, we see the MACD line cross below the signal line, and further indicating that there is a trend shift. And if we look at the same time that they cross over, that's when we see the histogram shift from this upper area in green, it gets lighter in color, and then falls to red. Now, as price begins to rebound and come back up, we see this histogram, it's deep in the red at this point. It's in a negative value, negative range at this point, right? We're looking from 1 to 0, and then 0 to a -1 in this particular oscillator example. So it looks like prices are low. Momentum is coming down. As price begins to balance out, consolidate, and then reverse to the upside, we see the histogram begin to turn around as well. It shifts color. It turns into a lighter pink, and then turns to white, and then eventually reversing and then passing over that 0 line, turning green. We also see a shift in the MACD and in the signal line, where we start to see this crossover. The MACD crosses over the signal line, indicating above it, I should say, indicating that prices are trending upwards. And we see the same thing over here as well. There's a lot of different examples of this happening. The main idea is to note how this fluctuates as general price direction shifts. Let's talk more on MACD crossovers. So when using the MACD, it's important to watch for events called crossovers, where the MACD line passes above or below the center line. This is called a center line crossover. So when the MACD line crosses above that 0 line, that flat value, it's a sign that the 12-day EMA is higher than the 26-day EMA. This suggests an uptrend. When the MACD line crosses below the 0 line, it's a sign that the 12-day EMA is lower than the 26-day EMA. This is a sign for a downtrend. So when you think about it, we're taking these smaller sample sizes, right? We're taking a look at a 12-day sample size. We're taking an EMA, exponential moving average, meaning that we're giving more value to the more recent days as opposed to the farther days, right? The 12th day, the away from the current day's closing price, right? So we're giving more weight to those more recent values. If this 12-day EMA is coming up or higher than the 26-day, which is taking a look at an even larger sample size, that's suggesting that, well, recent prices are increasing, they're trending upwards. This suggests an overall market uptrend. And we see the same thing in reverse, where if the MACD crosses below, it's a sign that the 12-day EMA is lower than the 26-day EMA. That's a sign for a downtrend. Now, another crossover to watch out for is when the MACD line crosses above or below the signal line, which is called signal line crossovers, when the two lines cross over each other. Some traders consider the MACD line crossing above the signal line to be a buying or longing opportunity. That's their signal. And when the MACD crosses below the signal line, that's when they look to sell or short. That's their signal for that. So here are a couple of examples. Here we have our bearish crossover that's going to be indicated in red, and our bullish crossover in green. So let's look for these bullish crossovers. So these are indications where the MACD line in blue is crossing below the signal line in red. This is an indication that the more recent prices are falling. And if we look at the chart, it actually happens around here. At the same time, it looked like price was around here. So this was a good indication. If you were to have shorted here, you could have rode this all the way down from, this is Ethereum to the US dollar on a daily chart. We could have rode this down from about 3,500, give or take, all the way down to, I mean, if you held it this long, the most extreme bottom produced here was about 1750. So that would have been a tremendous short if you shorted here. And at the same time, we do see the histogram shifting below. There was a signal line and a MACD crossover observed here as well. So this was around here, indicating that there was more downside to come. So there was multiple indications here if you were using the MACD that, hey, this was a potential area to get out. This was a shorting opportunity. And here's another opportunity, another bearish crossover, the MACD line crossing below the signal line. Happened around here, give or take. So if you did short here, if you opened up a short, price did recover a little bit, but ultimately it fell back down to a low from a high of about, let's say maybe 3,300 to a low of about 2,700, maybe 2,750. So this would have been another successful short. On the reverse side, we could also look for bullish crossovers where the MACD line is crossing above the signal line. And we have a few examples here. There's even more examples on this page that aren't highlighted. I'll leave that up to the viewer to find those, but we'll take a look at just the two examples that we have highlighted here. So here's an example. Price was coming down. Price is overall in the downtrend at this point, right? We're producing these lows. Price is slowly deteriorating. This is between May, June, and July 2021. Particularly here around the 20th, maybe 21st, we see a bullish crossover where the MACD line crosses above the signal line. At the same time, we are currently at, this was at maybe 1800. If you were to have opened up a long at this position, really you could have rode this up a significant amount. And really we do see the MACD line eventually would cross below. This would happen on the 16th of August, so almost a month, maybe 3 weeks worth of price action of holding. Let's see. So price at this point came to about 3,200, right, or even 3,000. So that would have been a very successful trade. I mean, even just purchasing here, buying here, and selling here when we saw the bullish crossover here with the MACD line, and then the bearish crossover here. So that alone would have been successful. We do see another highlighted bullish crossover. This is on the 1st of October. So let's say this was a starting price of about 3,000. Price continued to climb, and we really only see another crossover signaling an end or a possible end, a bearish crossover towards the end of the month, and that was when price was, it went to a high of maybe 4,250. So that again was yet another successful long based solely on bullish and bearish crossovers.